Very good afternoon, people. Soon, in 1 minute, we'll start the lecture. I hope you have revised income from house property, whatever we have done yesterday. Homework section question answers are also uploaded on BB Virtual's dashboard. So I hope you have started that calculation also because the chapter is already done. Okay. Once again, a very good afternoon to all of you. First of all, yesterday we have started with income from house property. Let us revise whatever we have done up to now and then we'll move forward. First, Section 22 prescribe three conditions to make any property a house property. There has to be a building or land appurtenant thereto. Assessee should be the owner of the property. Property should not be owned for the purpose of own business or profession. If these three conditions are fulfilled, any property can be termed as house property. Now, once any property is house property, we have to decide which kind of house property it is. If it is used for your staying purpose, it will be SOP, that is self-occupied property. If the property is given on a rent to somebody, it will be LOP, that is let out property. If it is neither used for staying purpose nor used for renting purpose, and the full year it is vacated, it will be called as deemed let out property. Achha, if you have more than two SOP, can I say up to two SOP, it will be SOP. Balance SOP will be called as deemed LOP. Then we saw the structure of calculation. Gross annual value minus municipal tax paid by the owner during the previous year. So you will get net annual value minus deduction under section 24. Clause A, 30% of NAV. Clause B, interest on borrowed capital. You will get your income from house property. Section 23 tells us how to calculate gross annual value. Municipal rent or fair rent, whichever is higher, that amount or standard rent, whichever is lower, that is called as expected rent or actual rent, whichever is higher. And actual rent is to be taken on an accrual basis, that is due basis. Okay, then we saw that if any rent which is not realizable, it is accrued, but it is not realizable, it is not recoverable, and all the three conditions of rule 4 are satisfied, it is called as unrealized rent. It is not to be deducted from expected rent. It will be always of 12 months. Can I say unrealized rent is to be reduced from actual rent? And finally, whichever is higher will become your gross annual value. Now we have to see the second topic which is related to gross annual value, and that is loss due to vacancy. Before I move forward, one clarification. Many students who has purchased the course from BB Virtuals have got the study material, and there is a small mistake in the study material ka cover page. It is written group 2 paper 7. It is actually wrongly printed. The notes which are given to you is updated one, is the same notes which I am using over here. Just the numberings are written wrongly on the cover page. It is group 1 paper 3A. That is the only difference. Otherwise it is one and the same only. That is updated notes only and the same which I am using in the lectures. Now the second topic which is given over here is loss due to vacancy. Now, what is loss due to vacancy? Okay. First of all, let's take an example and understand the scenario. Let's say expected rent. Achha, whenever I say expected rent, can I say I have used one line yesterday that if I'm telling to government for one day also that my house is rented, their expectation is built up for the entire year. So expected rent has to be of 12 month. Let's say expected rent of 12 month is rupees 1 lakh. But the actual rent is there only for 10 month. And that 10 month ka actual rent is 1,20,000. Now question is, why actual rent is only 10 month? Let me tell you what happened There was my house property which I have given on a rent to somebody. I have given it for full 12 months, but the tenant vacated the premise after 10 months. He said, now I'm getting some more property and that is at a lesser rent. So I said, okay, bye. So after 10 months, he vacated the premise. So now what happened? I found some another tenant, but ultimately I failed to found another tenant. And for the balance of the 2 months, February and March, my property was vacated. It was not in use at all. I could not find any kind of tenant for this upcoming 2 months. So my property was rented for 10 months, vacated for 2 months. So tell me, if it is vacated for 2 months, can we say loss due to vacancy? Because this 2 month ka rent I cannot realize. It is not accrued because of vacancy. And that's why the 2 month ka rent which I have not recovered is called as loss due to vacancy. Yeah, but isn't it the property will be called as deemed LOP? Because it is neither rented nor you are using it for your staying purpose. So will it not be called as deemed LOP? No, it will not be called as deemed LOP because I have told you deemed LOP means a property which is neither used for staying purpose nor used for renting purpose for full 12 months. Here can I say my property is rented for 10 months, vacated only for 2 months. Deemed LOP ka concept don't come into the picture. Loss due to vacancy ka concept comes into the picture. Now what happens when it is a loss due to vacancy? Please understand. Can I say already I have reduced? I have written my actual rent only of 10 months. And if it is only 10 months, that means that 2 month ka rent I have not included. And anyways, it is not supposed to be included because rent is to be included in actual rent only if it is accrued. However, this 2 month ka rent is not accrued because the tenant is not staying in that property. So it has to be reduced, which I have reduced already. Now, simply what will happen? Expected rent is of 12 months. That will always be of 12 months. Government will not reduce its expectation. Actual rent will be 10 months. Finally, we have to do whichever is higher, and that whichever is higher will become 1,20,000, and this will be called as gross annual value. Now, here neither government is having problem nor am I. The simple reason is by doing whichever is higher, answer is coming to 1,20,000, which is anyways my rent, not government ka rent. So basically, what rent I am telling to government is only coming into the answer, na? So neither I have any problem nor government have any problem. Whichever is higher will become actual rent because it is more. Acha, tell me one more thing. How this concept is different from unrealized rent. In unrealized rent also, we reduced unrealized rent from actual rent. Expected rent is always of 12 months. How this concept is different from unrealized rent? What is the difference? Can I say unrealized rent means rent has accrued but it is not receivable. Whereas loss due to vacancy means rent is not accrued itself. That is the meaning of loss due to vacancy. So yes, first we have to reduce it from actual rent and then we have to do whichever is higher. And if whichever is higher is actual rent, that will become GAV. Fine. Now, what is the problem? Expected rent is of 12 months, let's say 1 lakh. However, actual rent is only of 10 months and that comes to 90,000. Now, what will happen? What government will say? My expectation will always be of 12 months. So, ER will be always of 12 months. Your actual rent is of 10 months. You do whichever is higher. Now, if I do whichever is higher, the answer will come to rupees 1 lakh and that I will not accept. What I will tell to government? See, 1 lakh rupees is not GAV because it is your rent and government, your rent is of 12 months. Actually, the property is given on a rent only for 10 months. You can't do whichever is higher over here. My actual rent should become GAV. That's what I demanded. That my actual rent should become GAV. See, earlier I was not having a problem. You know why? Because whichever is higher was also my rent. My rent was such a higher one that even 10 month ka actual rent exceeded that 12 month ka expected rent. So, okay, that was fine for me. I accepted it. Here I'm not ready to accept because whichever is higher is government ka rent, which is obviously it can be higher now because it is of 12 month. So I'm not ready to accept. Government said, okay, if you prove that your actual rent is less than our expected rent just and just because of vacancy loss. We are okay to give you concession. We are okay to make your actual rent as GAV and not whichever is higher. I repeat, what government said, if this is the scenario that actual rent is less than expected rent and there is a concept called loss due to vacancy, if you can prove that actual rent is less than expected rent just because of vacancy, government is ready to give the concession. And what is there in the concession? Final rule will not be whichever is higher. Actual rent will become GAV. So here, how to prove it? Very simple. Just assume if there would have been no vacancy, if I would have received full year 12-month ka rent, what would have been my actual rent? Tell me, what would have been my actual rent if there would have been no vacancy? Can I say as of now 10-month ka rent is 90,000, then what will be 12-month ka rent? So if 10-month ka rent is 90,000, basically 12-month ka rent would have been 1,08,000. Can I say what I will say to government? See, government, my actual rent is more than expected rent. But if we deduct that 2 month ka vacancy loss, then my actual rent is reduced from expected rent. So can I say here my AR is less than ER just and just because of vacancy, because that comparison we have done. And yes, it is a genuine reason. Whichever is higher will not be done. GAV will be 90,000. What will be the GAV? 90,000. Let me give you one more example. We'll do again and again so many examples to understand this concept because it is little bit technical one. Let's say expected rent, which will be always of 12 month, 1 lakh. Actual rent, which in my example, let's say 10 month because 2 month loss due to vacancy, 80,000. What I'm saying to government, actual rent is less than expected rent. Whichever is higher not to be done, GAV should be AR. What government will say? Prove it. What I'm supposed to prove? I have to prove that AR is less than ER just due to vacancy. Now for this, what I have to assume? Let us assume there is no vacancy. So I would have received rent of full 12 month. Now if I have received rent of full 12 month, how much would I have received? Can I say for 10 month it is 80,000, then what would have been for 12 month? 96,000. What government will say? See, if you are adding back your vacancy loss, then also your AR is less than ER. Today also your AR is less than ER. So this is not because of vacancy, na. It is because of some other reason. You are charging very less rent. It is not because of vacancy. And hence your GAV will be whichever is higher, that will be 1 lakh. Here government will not give the concession. See, unrealized rent is such a simple concept, na? In that you just have to deduct from actual rent and then you have to do whichever is higher. Here you have to apply your analytical mind. Let me give you one more example, then one more, then one more. Okay. Let's say expected rent for full 12 month is 5 lakh, whereas actual rent is only for let's say 9 month because there are 3 month ka loss due to vacancy. But my 9 month ka actual rent is 6 lakh rupees. Tell me what will be my GAV? Can I say here if I do whichever is higher, 6 lakh rupees is the answer, which is anyways my rent. Means AR is already more than ER. Neither I have any problem nor government. So GAV will be rupees 6 lakh, whichever is higher. Let's say expected rent of 12 month is 5 lakh. Actual rent for 9 month is 4 lakh 50,000. Now can I say AR is less than ER? So what government is saying? Prove it. Prove it that it is because of vacancy. Then what I will do? If there would have been no vacancy, then what would have been my AR? Can I say for 9 month it is 4 lakh 50,000. So what would it would be for 12 month? It will be 6 lakh. So can I say at that time it was more than ER, but now this is less than ER? Then it is because of what? Vacancy. And hence government will give me the concession. My GAV will not be whichever is higher. It will be actual rent, that will be 4 lakh 50,000. One more. Let's say expected rent for 12 month 5 lakh. Actual rent, which is only for 9 month, is let's assume 4 lakh. Tell me, again my AR is less than ER. I am asking for the concession. What government will say? Prove it. If there would have been no vacancy, so can I say 9 month ka rent is 4 lakh? Then what would it have been if there would have been no vacancy for 12 months? Can I say if 9 month is 4 lakh, then for 12 month it will be 5 lakh 33,333. Can I say again it is more than ER, but now it is less than ER. So it is because of what? Vacancy. Government will give me the concession. My GAV will be rupees 4 lakh and it will not be whichever is higher. Okay. Let's say expected rent of 12 month is 5 lakh. Actual rent of 9 month is only rupees 3 lakh. I'm asking the concession. Government said prove it. If there would have been no vacancy, then what would have been my actual rent? If for 9 month it is 3 lakh, then what it would have been if it is for 12 month? It will be 4 lakh. It will be 4 lakh. Can I say that was also less than ER? Today also less than ER. So it is not because of vacancy. You are charging very less rent and hence your GAV will not be whichever is higher. Sorry, your GAV will be whichever is higher. Concession will not be given. GAV will be rupees 5 lakh. Are you understanding this? So when your AR is less than ER and loss due to vacancy is there in your picture, you have to do this analysis and then you have to find out that whether concession will be granted or it will be simple whichever is higher. See how I have written this entire provision over here. If AR is more than ER, then to no question at all. It will be whichever is higher. GAV will be actual rent. If AR is less than ER, so can I say now government will ask for the proof? Then what I will do? If there would have been no vacancy, means I will add my vacancy loss. If after adding my vacancy loss, that amount is more than ER, but today it is less than ER, government will give me the concession, GAV will be actual rent. However, if I add the vacancy loss and that notional amount is also less than or equal to ER, and today also it is less than ER, government will not give me the concession, GAV will be whichever is higher and that will be expected rent. See, all this comes in real life only when income tax officer has a doubt. Otherwise, yesterday only I told you that in real life, generally what happens, actual rent becomes gross annual value. This all things come into the picture when government has a doubt on your GAV. In exam, so we have to do this compulsory. I have written some 4 example over here. Then again, we'll do extra question number 1. First of all, you solve this example. 12 month ka expected rent is given. 10 month ka actual rent is given because 2 month is lost due to vacancy. Compute GAV over here in all these 4 example. Start solving it. Okay, let us solve this together. Expected rent of 12 month is rupees 3 lakh, whereas 10 month ka actual rent is 3 lakh 20,000. Can I say my actual rent is more than expected rent? I don't have to do any kind of comparison. My GAV will be whichever is higher. That will be 3 lakh 20,000. Now let's say expected rent is 3 lakh, actual rent for 10 month 2 lakh 80,000. Means it is less than expected rent. I have to count a notional loss. What if there would have been no vacancy? Can I say if 10 month it is 2 lakh 80,000, how much it will be if there is no vacancy? So that amount will come to 3 lakh 36,000. At that time, it was more than expected rent. Now this is less than expected rent. So why this happened? Because of vacancy. Government will give the concession. GAV will be 2 lakh 80,000. Now let's say over here, my actual rent is only 2 lakh 20,000. If there would have been no vacancy, then can I say it will be 2 lakh 64,000? Means this is also less than expected rent. Today also it is less than expected rent. It is not because of vacancy. It is because of any other reason. Government will not give me the concession. My GAV will be expected rent. That will be rupees 3 lakh. Last. Expected rent is 3 lakh. 12 month. Actual rent of 10 month is 2 lakh 50,000. If there would have been no vacancy, can I say my notional rent would have been rupees 3 lakh? Now tell me what will be the GAV. Concession will be given or not? Concession will be given or not? It will not be given. Because I have written the provision very carefully. If after adding the vacancy loss also the amount is less than or equal to ER, concession will not be given. GAV will be expected rent. That will be rupees 3 lakh. If it would have been 3 lakh 1,000, let's say, then also it would have been okay. Concession would have been given. Concession will be given. Actual rent will become your GAV only if that notional rent is more than expected rent. If it is less than or equal to expected rent, concession will not be given and it will be always expected rent. To further solve this, to further have some more clarity, I have drafted one more question, that is extra question number 1. So let us do that extra questions ka question number 1. I have to compute gross annual value. Again, 5 examples are there. Let us understand what information I have given over here. Municipal value, fair rent, SRRCA means Standard Rent as per Rent Control Act. Actual rent received. This is after deducting loss due to vacancy. Then for how many month property is vacated? So in some cases it is only 1 month, in 1.5 months, somewhere 10 months it was vacated. So loss due to vacancy ke months are given. How much is the vacancy rent? Now please understand this is total vacancy rent. So if let's say over here it is 1.5 month. So this 3562 represent rent of that 1.5 month. So you can directly ignore this how many months. So it is okay. This is the total vacancy rent. And when I say actual rent received, it is obviously for the balance month for which tenant was there in my property. I hope you understand the question first of all. Let us solve the first question together. And then you solve balance 4. First, can I say first, so what we have to do? We have to calculate our expected rent. Municipal rent or fair rent, whichever is higher. That amount of standard rent, whichever is lower. So over here, it will be 29750. Now, what is the actual rent given over here? 33,000. Can I say actual rent is more than expected rent? You don't have to see anything else. Your GAV will be whichever is higher. GAV will be 33,000. Okay, solve this second one. Solve the second one. First of all, you need to calculate what will be the expected rent. So here, whichever is higher and whichever is lower comes to 29,500. Acha, the actual rent over here is only 24,938. That is less than expected rent. So what we have to see? What if there would have been no vacancy? So I have to add this vacancy loss. So 24,938 plus 3562. Can I say it will be 28,500? Now this is 28,500. Now can I say at this time also it was less than expected rent? Today also it is less than expected rent. So government will not give me any kind of concession. What will be my GAV expected rent? And that will be 29,500. My GAV will be 29,500. Tell me what will be the answer in the third case. Firstly, what will be expected rent? Whichever is higher, whichever is lower, 31,500. Acha, what is the actual rent given? 21,000, which is less than expected rent. If there would have been no vacancy, can I say I would have added this 15,000? So now my rent will become 36,000. This was more than expected rent. But today this is less than expected rent. So why this happened? Because of vacancy. Government is ready to give me the concession. Here GAV will be actual rent, that will be 21,000. I hope you are understanding all the three scenario. We have done so many examples on this. Acha, now calculate this fourth one and tell me the final answer. This kind of question will not come into the exam. Now this will become a small adjustment. As of now, though, we are gathering one by one each and every step. And then whole and sole question will come. So this is just we are deriving GAV. In the exam, they will ask directly income from house property. Acha, expected rent. How to calculate that? Whichever is higher, 40,000. Whichever is lower, 40,000. Expected rent comes to 40,000. So now, what is the actual rent given in the picture? That is 27,000. If there would have been no vacancy, 9,000 I would have added. So total it will become 36,000. Can I say at that time also this is less than expected rent? Today also it is less than expected rent. Concession will not be given. GAV will be whichever is higher. That will be 40,000. Last. Whichever is higher, whichever is lower. 60,000 is expected rent. Actual rent is 8,000. If there is no vacancy, it would have been 48,000. Can I say it was also less than ER? Today also less than ER. No concession will be given. GAV will be whichever is higher. That will be 60,000. This entire answer I have given in my notes along with all the particular reasoning also. So that entire thing is written over here. Because it is extra question, answer will be there in my notes. Okay. So that was loss due to vacancy. That was unrealized rent. Let me give you one example to solve. Municipal value is rupees 2 lakh. Fair rent is rupees 3 lakh. Standard rent as per Rent Control Act is rupees 2 lakh 50,000. Property is rented for 10 months for rupees 24,000 per month. So why only 10 months? Because tenant vacated the premise. So 2 months is basically lost due to vacancy. Now out of this 10 month, 1 month rent could not be realized. And let's assume all the condition of rule 4 satisfied. So what I have given unrealized rent concept also, which is of 1 month. So what would have happened? Tenant is there in the property for 10 months. In that last month ka rent is not recoverable. So I told him to vacate my premise. And for the balance 2 month, there is no tenant in my premise. So basically 1 month is unrealized rent, 2 month is lost due to vacancy. Can I say brilliantly I have merged two things over here. One is unrealized rent, one is lost due to vacancy. How to solve GAV if these two concepts are in the same question? You solve it first. You apply your mind. First you have to apply unrealized rent. Then you have to apply the concept of loss due to vacancy. You solve it on your own and then I'll guide you what to do in this case. Okay. Now, first of all, what will calculate first? Expected rent. Can I say expected rent is basically whichever is higher, whichever is lower, that is municipal rent or fair rent, whichever is higher, that amount of standard rent, whichever is lower. This will be 2,50,000 and this is obviously of entire 12 month. So my expected rent comes to 2,50,000. Now the actual rent into the picture. Acha, this expected rent is of 12 month. Tell me how much month ka actual rent I will take. See, accrued is only 10 month, but from that also 1 month is unrealized rent that is to be reduced. So ultimately my actual rent will become 9 month. It is like 10 minus 1, accrue minus unrealized rent. So can I say 9 month the property ka rent is received, 24,000 into 9, it is 2,16,000. This unrealized rent ka concept is done. I have reduced from actual rent. Now what I have to do? Loss due to vacancy ka concept. Can I say my AR is less than ER? If there would have been no vacancy, then what would have been my actual rent? Tell me. If there would have been no vacancy, what would have been my actual rent? You don't need to see 12 month. You need to see 11 month. Understand why? You just need to add vacancy loss. You are not supposed to add back unrealized rent. So when I ask you that what will be my rent if there would have been no vacancy, what you will simply do? 2,16,000, which is actual rent, plus 2 month ka vacancy loss add back. So 2 month ka vacancy loss is basically 48,000. So what would have been my actual rent over here? 2,64,000. Now this was more than expected rent. Today it is less than expected rent. It happened because of vacancy. Your GAV will be actual rent 2,16,000. Are you understanding this? First you need to apply unrealized rent that you have to deduct from actual rent, and then you need to apply the concept of loss due to vacancy, wherein you will add back only those 2 month ka rent which is vacated. You will not add back unrealized rent. It will be still there. And then you will compare like we were comparing up to now. So this will happen. This is the whole and sole example. See here your expected rent also came into the picture. Loss due to vacancy also came into the picture. Unrealized rent also came into the picture. This is the whole and sole example. Everything of GAV comes into this one example. Are you understanding this? Tell me, up to now, whatever GAV we have found, it is regarding which property? Is it for LOP, SOP, deemed LOP all? No. It was only for let out property because everywhere actual rent word was there. The property was actually given on rent. But can I say for the property which is self-occupied, there is no actual rent? The property which is deemed let out. What is the meaning of deemed let out? I'm not saying it is let out. Government is assuming that it is let out. So obviously there is no actual rent into the picture. And that's why whatever we have done up to now is only applicable for one kind of property, and that is LOP. Now, can I say if the property is a self-occupied property, that means I'm staying in that property. What benefit I'm deriving it from that? What monetary benefit I'm getting? Nothing. And that's why for self-occupied property, gross annual value is zero. For self-occupied property, GAV is zero. Always zero. You don't need to calculate. Achha, what is the meaning of deemed let out property? Can I say deemed let out property means a property which is not given on rent, but government is assuming that it is given on rent. Means there is something called as government key expectation. ER is there, but there is nothing called as actual rent. And if any information is not there, ignore that. That will become your GAV. Means if it is a deemed LOP, what will become my GAV? Expected rent. This is very simple. See what I have written over here. GAV for SOP 0. GAV for deemed LOP expected rent. You just have a quick go through on this loss due to vacancy concept and these two lines. Just have a quick go through of this. Okay. We are done with the very first step, and that is gross annual value. Now, after gross annual value, what is the second step in the structure? Municipal tax paid by the owner during the previous year. Let us understand whole and soul all the things regarding this one line. Municipal tax paid by the owner during the previous year. Now, let me tell you, municipal tax is not only one tax, it is a huge word. Municipal tax means any kind of tax which is covered by state government for your property or peripherals. So municipal tax include first of all to municipal tax. Second, it include property tax also. Third, it also include water tax. Then any kind of drainage system tax, sewage tax, etc. That is also included within this. And all this combinedly called as what? Municipal tax. All this combinedly called as municipal tax. So if in your question, they have not used the word municipal tax, but they have given you property tax, they have given water tax, they have given sewage tax, you will do total of all this and that will be deducted as a municipal tax. Because this is a direct expense. This is the expense regarding your house property. So income tax department is okay to give you deduction of this so that your taxable income went down and your tax payable goes down. Now, what if in the question they have given municipal tax is 10%? Now, you need to calculate the amount na, for deduction. They have given municipal tax is 10%. On which amount you will apply this 10%? Option number 1, you will apply on municipal value. Option number 2, you will apply on expected rent. Option number 3, you will apply on gross annual value. Option number 4, you will apply on actual rent. Tell me, this percentage you will apply on which value? Can I say it is always of municipal value? Yesterday when I explained the term municipal value, I said that state government determine a notional rent value of each and every kind of property in every area so that state government can charge municipal tax on that. So if any percentage is given in your particular question, that percentage you will apply on which value? Municipal value. Okay. What if I tell you that your municipal tax accrued during the year 25,000? However, during the year 24-25, you paid only 20,000. So for the year 24-25, accrued is 25,000, paid is only 20,000. Tell me, how much deduction I will get? How much deduction I will get while computing income from house property? So can I say the wording was pretty clear, which we revised 3 to 4 times. Municipal tax paid by owner during the previous year. Here we can't take the deduction on accrual expense. We have to take the deduction only if it is paid. And how much is paid over here? 20,000. So what will be the deduction amount? 20,000. See, the rental income we have to take on accrual basis, but the deduction we have to take on compulsory on a payment basis. So municipal tax is to be deducted only if it is paid. Acha. Let's say the property ka municipal tax 25,000. During the year, owner of the property paid 20,000, whereas as per the agreement, tenant will pay remaining 5,000. Both paid during the year itself. Total payment has been done 25,000. Owner has done the payment of 20,000. Tenant has done the payment of 5,000. Tell me, what will be allowed as a deduction? What will be allowed as a deduction? And this is also pretty clear as per that one line. Municipal tax paid by owner during the previous year. I will get deduction only what I paid, that is 20,000. I will not get the deduction what my tenant paid. Okay. Let's say during the year 24-25, 25,000 rupees is the municipal tax. We paid only 22,000. So how much deduction will be allowed? 22,000 because we paid only 22,000. Now, in the very next year, 25-26, what we did, first we paid what was outstanding of last year, 3,000, which belongs to 24-25, paid in the year 25-26. We also paid some further 20,000, which belongs to 25-26. Total we paid 23,000. Tell me, How much deduction will be allowed in 25-26? How much deduction will be allowed in the year 25-26? Is it only 20,000 which belongs to 25-26? If you say yes, then can I say to this 3,000, what an injustice has been done? Last year you have not allowed by saying that you are not paid. This year you are not allowing that 3,000 by saying that you don't belong to this year. Then where this deduction will go? And that's why what government is saying that you will get deduction of full 23,000. You don't need to see of which year it belongs to. What you need to see in which year you paid. Can I say I paid 23,000 during this year 25-26? I will get full deduction 23,000. So even though you paid for so many years combinedly during the year, you will get entire deduction. Acha, now let's say during the year 24-25, I paid municipal tax 20,000, but there was a delay of 1 month or so. So basically government charged interest of 1,000 and some penalty also, totaling to 1,000. Total I paid 21,000. How much will be allowed to me as a deduction? How much will be allowed to me as a deduction? How much will be allowed to me as a deduction? Only 20,000. The simple reason is government is giving us the deduction of municipal tax and not interest and penalty. So to me, only 20,000 will be allowed as a deduction over here. Then what if my property is a self-occupied property? The municipal tax is charged even for self-occupied property, even for let out property. For let out property, though, I will get the deduction if I have paid the municipal tax. What if my property is a self-occupied property? Will I get the deduction of municipal tax? The question arises because GAV of such self-occupied property is zero, and hence I will not get municipal tax deduction also. It will be assumed as zero. So can I say for self-occupied property GAV is zero, municipal tax is also zero. So by default net annual value is also zero as per the structure. So GAV also zero, municipal tax also zero, net annual value also zero. But what if my property is a deemed let out property? Can I say there is something called as GAV, which is expected rent? And if there is a income, I will get the deduction also for the expenditure. So here I will get the municipal tax cut deduction like I am getting in let out property when it is paid by the owner during the previous year. One last question. What if I am a R and OR? What is the meaning of R and OR? Resident and ordinary resident of India, that is the full form. What is the meaning thereby? Global income taxable in India. Let's say I have a house property in USA from where I'm getting a rental income. Just because I am a R&OR, can I say this rental income will be taxable in India and that will become my gross annual value? Now, USA ki government is also charging municipal tax from me and which I have paid during the year. My doubt is, while calculating our Indian income tax, can I deduct that municipal tax which I have paid to USA government? Because this municipal tax is not paid in India, it is paid in USA. Can I take deduction of that municipal tax which is paid outside India? The answer is yes, I will get the deduction. Why I will get the deduction? It is because of Madras High Court judgment. What Madras High Court is saying? If you can tax the income which belongs to another country, you have to give the deduction of the expense which is paid in another country. Income expense matching concept. And that's why if rental income of another country is taxable in India, municipal tax paid in another country is also deductible in India if it is paid during the year. So see, there was only one line, municipal tax paid by the owner during the previous year. These are the permutation combinations to understand for that particular point. This all the things I have written over here. You don't need to worry, I have written each and everything in my notes. These notes are written in such a simple manner that even on the last day, you just have to refer this and all the points will be covered. See, what all are the coverage of municipal tax? First of all, municipal tax, property tax, sewage tax, comma, you can add water tax. If it is a percentage, that percentage is always of what? Municipal value. Acha, from gross annual value, municipal tax paid to local authorities deducted if it is paid by owner in the current year, that is during previous year. So what are small points applicable? If paid by tenant, no deduction. If it is payable, accrued yet not paid, no deduction. If paid in the previous year for so many years combinedly, can say you don't have to see of which year it belongs to. You just need to see in which year you paid. You will get full deduction. If house property is outside India, then municipal tax paid outside India is also deductible as per Madras High Court judgment. Acha, if it is a self-occupied property, no deduction. But if it is a deemed let out property, you will get full deduction. One more point you can add over here. No deduction of interest oblique late fee for late payment. So if you are also paying some interest, etc. on this municipal tax, that is not allowed as a deduction. Now, based on this, we have to see illustration number 2. This all are basically of ICI. Illustrations are of ICAI. And ICI has given so many brilliant examples for each and every concept. Rajesh, a British national, is a resident and ordinary resident in India. During the year 24-25, he owns a house in London, which he has let out at £10,000 per month. The municipal tax paid to Municipal Corporation of London is £8,000 during the year 24-25. The value of £1 to Indian rupee may be taken at rupees 95. Compute Rajesh's net annual value. They have not asked income from house property. They have just asked what is the net annual value. Calculate and tell me what will be net annual value. Can you say first of all, though this property is a rented property, so this is called as let out property, LOP. Rajesh is a R&OR, so global income taxable in India. And there cannot be expected rent because it is not India, na? So my actual rent will become gross annual value, which is £10,000 per month. So yearly it will become £1,20,000, and £1 may be taken at rupees 95. So basically 1,20,000 into 95. Can I say 1 crore 14 lakh will become my gross annual value? Now from that, what I will deduct? Municipal tax paid by the owner during the previous year, and as per Madras High Court judgment, even the municipal tax paid outside India is also deductible. So £8,000 multiplied by 95 rupees, total 7,60,000 I will deduct from GAV, and this leads to my net annual value 1 crore 6,40,000. Are you understanding this, people? So, moral of the story, municipal tax paid outside India is also deductible in India. If income is taxable, expense is also taxable, that is deductible. Okay. So we understood everything about gross annual value. We understood everything about municipal tax paid by owner during the previous year. And after deducting this municipal tax, whatever comes to us is net annual value, NAV. But can I say it is just a mathematical subtotal? GAV minus municipal tax comes to NAV, net annual value. From net annual value, what we are deducting now? Deduction under section 24. Clause A, 30% of NAV. Clause B, interest on borrowed capital. Let us first understand the very first deduction, 24 clause A, 30% of NAV. Before I move forward, a small announcement. As we have started these lectures from BB Virtual app, from tomorrow, once again, the lecture will resumed at BB Virtual application. So basically from tomorrow, you are not supposed to see this YouTube live. You have to join your lecture through that BB virtual preparation application. So from your application, you have to join the lecture from tomorrow. Okay, so up to now we have got net annual value. Now we'll deduct the very first deduction, 24 clause A, which is 30% of NAV. Now understand what government said. We want to give you expenditure as a deduction, whatever expense is done. But if government will give me all the expense as a deduction, I will come up with so many expense which even don't exist by creating fake evidences. And that's why what government said, will not give you actual deduction, will give you a standard deduction. We will assume that what will be your expense, 30% of NAV. Whatever is your NAV, you deduct flat 30%. Even though you have less expense, even though you have more expense, what you have to compulsory reduce 30% of NAV. Apart from this, you will not get any other deduction. So even in the question, it is written electricity expense, cleaning expense, depreciation, insurance expense, all this you have to ignore because all these are covered by 30% of NAV. So please remember, in house property, you will get only three deductions. One, municipal tax, 124 clause A, 30% of NAV, and last, 24 clause B, interest on borrowed capital. Apart from this, any other expenditure is never allowed. But as per the mathematics, this 30% of NAV will become zero if your NAV is zero. If your NAV is zero, 30% also becomes zero. Tell me one case in which NAV is zero. Tell me any one case in which NAV is zero. Can I say self-occupied property, SOP? In case of SOP, GAV is also zero, municipal tax is also zero. So by default, NAV is also zero. In case of SOP, NAV is zero. So basically 30% is also zero. 24 clause A is also zero. Everything is 0, 0, 0. Then why we are learning the concept of SOP? Because there will be something called as 24 clause B that will come. Apart from that, everything will be zero. And for this 24 clause B, we are learning the concept of SOP. As of now, you can ignore. But there is one more case also. When this NAV will become zero, there is one more case. And that is 23 subsection 5. It is a very independent case. This particular point can come into your examination just as an MCQ, not in any other manner. It can just come as an MCQ. So you can mark this particular point for MCQ purpose. What we are learning as of now, first we are learning about 24 clause A, 30% of NAV, but that will become zero if my net annual value is zero. Then what we are learning as of now, when my net annual value will become zero, there are two cases in which my NAV is zero. One, if the property is SOP. Second point we are learning as of now. Which is the second point? Builder community is very strong community in our country because this builder community has a huge political connections also. And because of that connections, government has to give them concessions. And to any community, if they demand something which is reasonably genuine, generally income tax department gives them those concessions. And here also to the builder, some concession is given because their demand was very genuine. Let's take an example. If there is a company ABC Limited which is engaged into business of construction of the building and selling the same. Now company has constructed, let's say, 5 building, but this 5 building could not be sold. It is still unsold and it is in stock in trade. But now can I say there is some building? That building is still in the ownership of ABC Limited, and those building is as of now not used for business or profession. It is just be as it is. So this 5 property will become house property for ABC Limited. And if it will become house property, then we have to think which kind of house property. Neither ABC Limited is staying in this, nor it is given on a rental basis. This is fully vacated for the entire year. So this house property will become deemed let out property. And if it is a deemed let out property, can I say gross annual value will be counted, expected rent? Means there will be something called as income from house property on which tax has to be paid. Think from the viewpoint of this builder. His entire working capital is blocked. He could not sold this property. He is basically running into losses. Rather, income tax department is not considering this loss. Income tax department consider this property to be a deemed let out property and charge income tax on that on a notional income by considering expected rent as GAV. This is something not genuine. This is something unreasonable. And that's why builder lobby has asked for a concession. Government gave the concession 23 subsection 5, which says that if for you, your building is a stock in trade, basically you are a builder. For you, the building is a stock in trade. If you could not sold or it is not given on a rent, it is fully vacated. It is called as deemed LOP, but the NAV will be counted 0. Even though it is deemed LOP, NAV will be counted 0 up to 2 years. Concession is given, but it is not lifetime concession. If you could not sold the property up to 2 years, your NAV will be 0. If after that also it is still there in your stock in trade, we will start calculating notional rent. We will tax you after 2 years. The benefit is only up to 2 years. So once again, this benefit is given to the builder for whom the building is a stock in trade. And what is the concession given? Though it is a house property, though it is a deemed let out property, but the net annual value will be counted 0 up to 2 years. Question arises, from which date these 2 years are to be seen? Is it from my birth date? No. NAV will be 0 up to 2 years from end of the financial year in which COC received. Once again, NAV will be 0 up to 2 years from end of the financial year in which COC is received. Achha, what is the meaning of COC? Certificate of completion. What I'm saying, certificate of completion. Achha, tell me one thing. Today I am a builder. I constructed the building. And if it is okay as per me, can I call the people, come over here, stay in the house because it is ready to sell? No. I have to call the local authority. I have to ask them, you check this property once. If it is okay as per you, you pass a order that this is suitable for staying, which is called a BU permission. BU permission in real life. In sophisticated English legal terms, certificate of completion. And once that certificate is received, then only I can tell the people to come in this house and stay. So this net annual value ka 0 wala benefit is available up to 2 years from end of the financial year in which certificate of completion is received from the competent authority. See, I have written one example over here. Mr. Salman is a builder who constructed 100 residential flat and office premise. COC received on 1st April 2020. He wants to know up to which year the NAV of all such property will be 0 if property is not sold out nor given on rent. You tell me up to which date Salman will get a benefit of 0 NAV. Up to which date? Tell me. It will be 31st March 2023. 31st March 2023. Why? See, 2 years are not to be counted from the date of COC. No. COC is 1st April 20. You have to see what is the end of the financial year. Can I say end of the financial year is 31st March 2021? And in that you have to add 2 years. That will come to 31st March 2023. So the 0 NAV ka benefit is up to 31st March 2023. If we closely see this example, Mr. Salman has got the benefit for 3 years. See, because the year in which COC is received, that year too you are anyways getting the benefit. After that, for another 2 years, you are getting the benefit. So here, Mr. Salman ultimately got the benefit for effectively 3 years. But what the provision you have to use while speaking, while applying? 2 years from end of financial year in which certificate of completion is obtained from competent authority. Please read this 23 subsection 5 once. This just can come as an MCQ. It can't be merged with any other particular question. Okay. So up to now, what we have understood, there are three kind of property: LOP, SOP, deemed let out property. Now, in case of LOP, we have to calculate GAV will be expected rent or actual rent, whichever is higher. From that, we will deduct the municipal tax if it is paid. We will get the net annual value. From that, we will get 24 clause A, that will be 30% of NAV. And now we will get 24 clause B, that is interest on borrowed capital. If it is a self-occupied property, can I say the net annual value itself will become zero? Because GAV is also zero, municipal tax is also zero. So basically net annual value will become what? Zero. So obviously 30% deduction is also zero. What only thing we will get is 24 clause B ka deduction. Last, deemed LOP. In that case also GAV will be there, which will be expected rent. Here also I can deduct municipal tax. There will be something called as NAV. I will get 30% standard deduction. I will get 24 clause B ka deduction. Final will be income from house property. So this is the overview of whatever we have understood. While calculating this GAV, we are getting two more concepts, that is unrealized rent, loss due to vacancy. And if you are a builder, even though you have deemed LOP, but the NAV will become zero up to 2 years from end of year in which COC is received. I hope you understand up to now. Now let us start understanding one of the biggest, one of the important topic of this entire structure, which is applicable in all the three kind of property. 24 clause B, interest on borrowed capital. 24 clause B, interest on borrowed capital. What is that all about? Now government is emphasizing that a person who is of India should either purchase or construct or repair or renovate the house property. What a person should do? Purchase or construct. Like many people, take a land and construct a bungalow over there. Many people directly purchase a house in the ready-made apartment. Many people has a old property. So what they will do generally, small repairing work they will do so that they can live happily. Or what they will do, they will renovate the entire property. So four kind of expense you can do on any kind of house property: purchase, construction, repair, renovation. But for that, what if you don't have enough money? Can I say you will take a loan? Acha, from where you can take a loan? From wherever you want. You can take a loan from bank, you can take a loan from NBFC, you can take a loan from your relative, you can take a loan from your friend if he gives you the money, etc. etc. You can take loan from any person. If you take loan, every year, can I say you will pay EMI, equated monthly installment. And in this EMI, basically you will pay two things. One, you will pay principal. That is basically the loan you will repay. Second, you will pay interest on that housing loan. This interest every year, what you are paying to your lender, government will give you deduction of this interest from your income from house property. So the moral of the story, you are not getting deduction for principal, you are getting deduction for interest. And this deduction is available even if you have taken the loan from any of this, no matter from whom you have taken a loan. You can take loan from anybody, but it should be housing loan. It should be either to purchase or to construct or to repair or to renovate your house property. Acha, up to which year you will get this deduction? So no such limit. If your housing loan is going on for 20 years and you are paying interest for 20 years, you will get deduction for 20 years. There is no such limit at all. So up to whatever period you will pay the interest, you will get the deduction under which section? 24 clause B. Now, this is the what deduction we will get. Important is how much deduction we will get. Now, mainly there can be two kind of property. Acha, whenever I'm explaining something in my blank pages, you don't refer to what is given in my notes. On that, obviously we'll go later on. First, you understand the process. Mainly, there can be two kind of property. One is let out property and deemed let out property. Another one is self-occupied property. Tell me why I have given the bifurcation like this. On one side, I have written LOP slash deemed LOP. On another side, I have written SOP. What is the purpose of this? Can I say here there is something called as GAV? There is something called as income, either actual income or notional income. Taxable income is there. And against that, I want to claim deduction. However, this property NAV is zero. There is nothing called income. But see, our government is so generous. Government says even though you don't have income for self-occupied property, still if you have taken housing loan, whatever is the interest, we will give you deduction from zero income. From your zero income also, we will give you deduction for this interest on house property. But sir, if something is deducted from zero, it will create a loss. Agree. It will be a negative figure, na? It will be a loss. That will be called as loss of house property. And in income tax, losses are very good because those loss will be set off against my other income, which will reduce my overall taxable income, which will reduce my tax payable. So ultimately, this interest will be given as a benefit from my income. It will be allowed as a deduction from my income, which will create a loss, and this loss will be set off against my other taxable income. So this is a very good thing that government is giving you. Basically, what government is trying to tell you, if you stay in a rented house, whatever rent you will pay, it is your personal expense. We will not give you deductions. You have to pay income tax on your salary income fully. Mainly this particular provision is for salaried, to please the salaried people. But if you take your own house, you will pay interest every year. That interest we will allow you as a deduction from your zero income. That will create a loss which you can set off against your salary income or PGBP income as the case may be, which reduces your ultimate tax liability. Okay, so on one side you are getting the deduction, income is also there, deduction is also there. In case of SOP, income is not there, only deduction is there. Now, can I say over here, when the property is LOP or deemed LOP, there is something called as income and I'm taking the deduction. It is not a free deduction and hence I will get full deduction. Whatever is my interest, either of 1 lakh or 10 lakh or 1 crore, I will get that full amount as a deduction under 24 clause B without any limit. So in case of LOP or deemed LOP, either your loan can be for repair or renovation or it can be for purchase or construction. We don't care. You will get full deduction without any limit. So let's say I have a let out property for which I have taken a loan to repair the house. And current year 24-25, interest of this loan comes to rupees 1 lakh. Tell me, while calculating income from house property, how much deduction I will get under section 24 clause B? Full rupees 1 lakh. Now, if this purpose changes to renovation or purchase or construction, the things will remain same. Full interest I will get as a deduction because the property is either a let out property or a deemed let out property. But if the property is a self-occupied property, there can be two cases. Either you have taken your loan for repair or renovation, or you have taken the loan for purchase or construction. Tell me why this two bifurcation? Repair, renovation or purchase, construction. How this matter? Can I say if it is a repair renovation, it must be of a smaller amount. But if it is a purchase construction, the loan must be of a higher amount. If it is repair or renovation, the interest deduction which I will get in case of a self-occupied property will be the interest amount of that year or rupees 30,000, whichever is lower. So maximum deduction every year, I will get 30,000 rupees. If it is a self-occupied property and if the loan is taken for repair or renovation, what is the maximum deduction I will get every year? 30,000. So tell me if in the same example, if the loan is taken for repairing of the house and the interest of the year 24-25 comes to rupees 1 lakh, but this property is not a let out property, it is a self-occupied property. What will happen? Can I say the net annual value comes to 0? I will get the deduction 24 clause B. How much deduction I will get over here? 30,000. Because it is a SOP, loan is taken for repairs. Deduction limited to 30,000. So ultimately loss from house property will come to 30,000. Now what if over here my interest amount was only 10,000? How much deduction I would have got? Then I would have got full 10,000. See, it is not a standard deduction. This 30,000 is not a standard limit. It is interest or 30,000, whichever is lower. If my interest is lower than 30,000, I will get lesser deduction. Now, if my property is SOP, loan is taken for purchase or construction. Can I say the loan amount is now bigger one? Interest will also be higher. Now I will get the deduction of rupees 2 lakh per year. How much deduction of interest I will get? Rupees 2 lakh if the loan is taken to purchase या तो construct the house property. But this 2 lakh rupees of deduction will be allowed only if I fulfill two conditions. Only if I fulfill two conditions, that 2 lakh rupees ka limit will be allowed. If I don't fulfill that two condition, yeah, either of the condition also I don't fulfill, the deduction will be restricted to 30,000. See once again, if it is a LOP or deemed LOP, either repair renovation or purchase construction, no limit at all, full deduction. If it is SOP, the loan is taken for repair or renovation, the maximum deduction will be 30,000. If it is purchase or construction, two conditions fulfilled, every year I will get deduction of rupees 2 lakh. But if it is not fulfilled, I will get deduction of rupees 30,000. Now the only question arises, what are those two conditions? First of all, you have this into your mind. These conditions are not applicable if the property is LOP or deemed LOP into without any limit. This condition is not to be seen if it is repair renovation ki loan, fixed 30,000. I mean maximum 30,000. These conditions are only to be seen if it is a SOP and the loan is taken for purchase or construction of the house property. Now what are the two conditions? Condition number 1, which majority of the crowd will fulfill. The purchase or construction of your house property should have been completed on or after 1st April 1999. You should have purchased the house, you should have constructed the house, and that completion date should be on or after 1st April 1999. Why such condition? Because there was an amendment from that year. Up to the year 98-99, the deduction was only 30,000. From 1st April 99, they came up with an amendment that now onwards whosoever will purchase the property, now onwards whosoever will construct the property, will get a higher deduction of rupees 2 lakh. So can I say those who have already purchased the house prior to this date, up to they will pay the interest, they will get only 30,000. But if later on you have purchased the house, your 2 lakh rupees limit deduction will start, subject to the second condition also, because both the conditions to be fulfilled for taking deduction of rupees 2 lakh. So is it possible that my house was purchased prior to 1st April 1999, but still I am paying interest of the loan? Yes, housing loan can be of 30 years also. It may be possible you have purchased the house in the year 96 97, but still that housing loan is continuing. Still you are paying interest on that. Deduction will be limited to 30,000. So the first condition, purchase or construction should be completed on or after 1st April 1999. Second condition, see many people what they are doing. First they take a loan and then they purchase the property. Yeah, first they take a loan, then they give the money to the builder for constructing the property. Now government is giving us the time of maximum 5 years that your purchase or construction should be completed within 5 years from end of the year in which loan is taken. The financial year in which you take the loan, you have to see the end of that year, end of the financial year. From that up to 5 years, the purchase or construction should be completed. If it is completed within 5 years, from that year till whatever year you pay the interest, deduction will be rupees 2 lakh. But if you don't complete within 5 years, let's say you complete within 6 years, from that year till whatever year you pay the interest, every year you will get deduction of only 30,000 as a punishment because you have done a delay in your construction. So once again, LOP deemed LOP, either repair renovation or purchase construction, no limit at all. If it is a self-occupied property, repair renovation 30,000, purchase construction, two conditions fulfilled, limit will be 2 lakh, otherwise 30,000. What are the two conditions simultaneously to be fulfilled? First, purchase or construction should be completed on or after 1st April 1999. Second, purchase or construction should be completed within 5 years from end of the year in which loan is taken. Achha, tell me one answer. Let's say I have taken a loan on 1st May 2017 to construct a bungalow, to construct a house property. The construction is completed on 1st June 2022. And let's assume the property is a let out property. Tell me how much deduction I will get. Can I say if it is a let out property or deemed let out property, I will get full deduction. I don't have to see anything else. What if this is a self-occupied property? Tell me, up to the year in which loan is going on, every year, how much deduction of interest I will get under 24 clause B? Is it 30,000 or rupees 2 lakh? What will be the limit of that? 30,000 or 2 lakh? So can I say first of all the very first condition, purchase or construction is completed on or after 1st April 1999. And second condition says that purchase or construction should be completed within 5 years from end of year in which loan is taken. Hey, this is more than 5 years, na? No, you don't have to see 5 years from the date of loan. First, you have to see what is the end of the financial year in which loan is taken. Can I say loan is taken 1st May 17? So end of the financial year 31st March 2018. Plus you have to add 5 years, that comes to 31st March 2023. Prior to this date your construction is completed, and that means you have fulfilled both the condition. Your deduction of interest will be rupees 2 lakh and not just 30,000. Are you understanding this? So what I have written once again, LOP deemed LOP, no limit at all. SOP, repair renovation, 30,000 limit. Loan is taken for purchase or construction. Then if two conditions fulfilled, the limit will be 2 lakh. If it is not fulfilled, the deduction will be there, but only 30,000. And what are those two conditions? Purchase or construction should be completed on or after 1st April 1999, and it should be completed within 5 years from end of the financial year in which loan is taken. Now let me ask you one more question. Let's say there is a person, Mr. A, who is having two SOP. Hey, by the way, can any person have two SOP? Yes, I can have two SOP. I cannot have more than two SOP. I have two SOP. It's okay. I have taken my first house property. I have taken my second house property. Acha, for the first house property, to repair the house, loan is taken and the interest comes to 35,000. For second house property, to purchase the house, loan is taken and the interest comes to 2,05,000. Can I say both the house property are SOP? And we have to do the calculation generally per house property. So can I say NAV of this property is also 0, NAV of this property is also 0, but I can take deductions now. Okay, I can take the deduction. Now here the loan is taken for repairing the house. So can I say for SOP to repair the house, deduction will be restricted to 30,000. And for second house, the loan is taken to purchase the house. And if nothing is written, you have to assume that both those conditions are fulfilled. So the deduction limit will be rupees 2 lakh. So here rupees 2 lakh, here rupees 30,000. Ultimately, how much deduction I will get combining of this 2 lakh? Combining of this both house property, my deduction will be rupees 2 lakh. Because what law has written? This 2 lakh rupees of limit which is given in SOP is per owner, not per house property. What I'm saying, the limit of rupees 2 lakh which is given in case of SOP is per owner, not per house property. Means if I have two house property, combinedly of this two, deduction cannot exceed rupees 2 lakh. And that's why what I will do, first I will restrict this 30,000, here 2 lakh, but again total will be 2 lakh 30,000, which I need to further restrict to rupees 2 lakh. Now if these properties are let out property, no tension at all. Here also 35,000, here also 2 lakh 5,000, I will get full deduction. So what if this property is let out property, this property is self-occupied property? Then okay, here I will get full 35,000 because it is let out property. Here it will be restricted to rupees 2 lakh because it is self-occupied property. But what if this both are SOP and one owner, means total deduction cannot exceed rupees 2 lakh? Let's take one more example. Let's say there is one house property, but there are co-owner. So here Mr. A, who is owner of 50%, and Mrs. A, who is wife, owner of 50%. Acha, both of this are using the property for self-occupation. SOP. So can I say for Mr. A also, the NAV will be 0. For Mrs. A also, the NAV will be 0. Calculation is to be done per taxpayer. Acha, for purchasing the house, they have taken a joint loan. And this year, interest of the entire house is rupees 5 lakh. So as the co-ownership is there, so half interest is paid by Mr. A, half interest is paid by Mrs. A. So can I say Mr. A will pay 2,50,000 ka interest, Mrs. A will also pay 2,50,000 ka interest. Tell me, how much deduction they both will get individually? How much deduction they will get individually? Is it 250, 250? Is it 2 lakh, 2 lakh? Or is it 1 lakh, 1 lakh? How much deduction they will get? My line was pretty clear. The deduction of rupees 2 lakh is per owner, not per house. See how positively it can be taken over here. Mr. A will also get a limit of rupees 2 lakh. For Mrs. A, the separate limit of 2 lakh will be there. They both can claim deduction of 2 lakh. Combinedly, they are going to take 4 lakh rupees of deduction. Because the deduction of SOP of rupees 2 lakh is per owner, not per house. Acha, negatively, how we can think if I have two house property, combined deduction is 2 lakh. Positively, how we can think if my house property has two co-owner, both will get 2 lakh ka deduction separately. And that's why in real life, generally people purchase the self-occupied property into co-ownership so that the limit of rupees 2 lakh is separate. They both get deduction of 2 lakh rupees. Here, if instead of two co-owners, let's say there are three co-owners, then all the three people will get the deduction of 2 lakh rupees subject to the total interest. But still, the limit of 2 lakh will be available per person. That is what I have written over here. Now see the provision which I have written, 24 clause B, interest on borrowed capital. One line you have to add over here. Loan can be taken from anyone. It can be bank, NBFC, friend, relative, whatever you think fit. It can be taken from anyone. If your property is a LOP or deemed LOP, either repair renovation or purchase construction, without any limit, you will get full deduction. But if it is a self-occupied property, the loan is taken for repair renovation. Every year deduction will be maximum 30,000. If it is purchase or construction, if two conditions are fulfilled, the deduction will be rupees 2 lakh per year per owner. First condition, purchase or construction should be completed on or after 1st April 1999. Second, purchase or construction should be completed within 5 years from end of the year in which loan is taken. I have written over here, deduction of rupees 2 lakh is per year per owner. If condition not satisfied, deduction will be restricted to 30,000. Remember, maximum deduction per owner for any loan combinedly is rupees 2 lakh for SOP. So limit is per owner, not per house. Are you understanding this? There are so many points yet to discuss in this 24 clause B. It is not over. 24 clause B, we have just understood little bit things over here. Many things we have to understood yet. But before I further resume the lecture, let's have a small break. I'll resume at 4 o'clock and 38 minutes. 4:38. I'll resume at 4:38. Thank you. Okay, friends, let us continue with the lecture. What we have understood up to now, so far as 24 clause B is concerned, if your property is let out property or deemed let out property, you can claim deduction for any amount. If it is a self-occupied property, and if the loan is taken for repair or renovation, you can take deduction only up to rupees 30,000. And if it is for purchase or construction, if two conditions are fulfilled, you can take deduction of rupees 2 lakh. Otherwise, you can take deduction of rupees 30,000. What are the two conditions? Purchase or construction should be completed on or after 1st April 1999, and purchase or construction should be completed within 5 years from end of year in which loan is taken. Now, let me ask you some questions and let us discuss these other points. But actually, these are not others. These are very important points to taken care of this 24 clause B. Let's say for the year 24-25, the total interest which is accrued is rupees 1 lakh. However, I have paid only 90,000. Accrued is 1 lakh, paid only 90,000. How much deduction will be allowed? Now, here I will get a deduction of rupees 1 lakh because the interest deduction is not on payment basis, it is on accrual basis. So confusing now. Rent is to be taken on accrual basis, municipal tax to be deducted on payment basis, but interest is to be taken on accrual basis. So remember, entire house property works on accrual basis except municipal tax. So that's why everything we will take on accrual basis, but the municipal tax we will take a deduction as per payment basis. So here interest will be allowed as rupees 1 lakh. Okay. Now this question is very important which I'm going to ask you. If I have taken a loan in the year 23-24, however the purchase is completed in the year 24-25. So the loan is taken in the year 23-24, purchase is completed in the year 24-25. Tell me, I will start repaying the loan from 23-24. So my interest will start from the year 23-24. I will pay interest in 23-24 also, 24-25 also, and further also. From which year I will get deduction of interest? From which year I will get deduction of interest? Is it from 23-24 or it will be from 24-25? For this, you have to think something logically. Now, what logically you will think? When I'm claiming interest on borrowed capital as a deduction, when I'm computing income from house property, when I'm computing income from house property, when there is a house property, and when a property becomes a house property, when I'm the owner of the house property. Can I say in this case, I became the owner in the year 24-25? So property became house property from the year 24-25. Income from house property will be computed from 24-25. So deduction will also be received from which year? 24-25. I will get deduction from 24-25 and not from 23-24. But understand one thing. If there is 1 year, loan is taken in that financial year, even the purchase is also done in that financial year, then this problem does not arise because then the interest will start from the same financial year. The problem arises only when two financial years are separate. So if the loan is taken in one financial year, purchase or construction is completed in some another financial year, the deduction will start from the year in which purchase or construction is completed because you are becoming owner from that year itself. So here you will get the question that, sir, we have paid interest for 23-24 also now. But you said that we will get deduction from 24-25. So what will do for that interest which we have paid in this year? So don't get worried about that. You will get deduction of that interest also in some other manner. And that some other manner is called as pre-construction interest. And that topic I'm teaching you in just 5 to 10 minutes. As of now, you remember that deduction will start from the year in which purchase or construction is completed. Better you remember, deduction of interest start from beginning of the financial year. From beginning of the financial year in which purchase or construction is completed. Let me give you one more example. I have taken a loan from 1st July 2022 to purchase a house property, and finally the house property is purchased on 1st October 2024. Tell me from which date I will get deduction of interest. So I have just written above the deduction of interest start from beginning of the financial year in which loan is taken. And can I say from which purchase or construction is completed? And here purchase is completed on 1st October 24. The beginning of the year is 1st April 24. My deduction will start from 1st April 24. I will get deduction from 1st April 24. Then sir, what about the interest from 1st July 22 till 31st March 24? So I said, nah, don't worry about that. You will get deduction of this period also in the name of pre-construction interest that I'll teach in some time. As of now, you remember, deductions start from beginning of the year in which purchase or construction is completed. Comfortable up to now? Now, let's say I have taken a loan, and while taking the loan, some agent has taken from me commission of worth rupees, let's say 10,000. And during that year, bank has charged about some processing charges, and that processing charges are also 12,000. And I have paid the interest of rupees 1 lakh. Total, I have paid rupees 1 lakh 22,000. Tell me, how much deduction I will get? Is it full 1 lakh 22,000? Or is it an interest of rupees 1 lakh? Can I say it is only interest of rupees 1 lakh? I will not get deduction of this commission ya to processing charges. That deduction is never allowed. Deduction is only of what? Interest. One more point. Let's say my interest, which is accrued during the year, is rupees 1 lakh. But I have done a delay in paying that interest. I have done a delay. And accordingly, bank has charged penal interest from me. Penal interest means interest on unpaid interest. So interest on unpaid interest, and that is rupees 10,000. Finally, I paid 1 lakh 10,000. How much deduction will be allowed to me? How much deduction will be allowed? I will get deduction of full 1 lakh. I will not get deduction of this penal interest because this is not interest. This is one kind of penalty. And here the deduction is of interest, not of penalty. So I will not get deduction of penal interest. I will get deduction only of the basic interest. Now, let's take one example. I was about to take a loan and nobody was giving me the loan. So there was a person called Mr. A. He said, I will give you a loan of rupees 50 lakh, which is at the rate of 10% interest. I said, it is a very high rate of interest. He said, okay, then take loan from somebody else. I said, no, nobody is giving me the loan. Mr. A said, that's why I'm giving you the loan now, but at a higher rate of interest, that is 10%. I said, okay. I took a loan, I purchased the house. Every year I'm paying interest to Mr. A, that is approximately rupees 5 lakh. And why I'm paying this interest? Because this is a housing loan. And this interest I'm taking as a deduction under section 24 clause B. After 2 years, Mr. B came to me and he said, now I will also give you the loan of rupees 50 lakh, which is only at the rate of 7%. So what I thought, let me take this 50 lakh rupees of loan. I will take a loan from Mr. B. I will repay entire loan of Mr. A. So now can I say the loan of Mr. A will become zero? Now whose loan will be outstanding? Mr. B. Why I have done this? I have brilliantly reduced my cost of interest. Up to now, I was paying interest to Mr. A, which was at the rate of 10%. Now I'm supposed to pay interest to Mr. B only, which is at the rate of 7%. I have reduced my interest for 3%. Now, my doubt is, Up to now, I was paying interest to Mr. A. The loan was taken to purchase a house, and that interest was allowed to me as a deduction in 24 clause B. Now I have taken a loan from Mr. B to repay the loan of Mr. A. And now onwards, to whom I will pay the interest? Mr. B. Whether this will be allowed as a deduction in 24 clause B? Because see, ultimately this particular loan is not to directly to acquire the house. This loan is taken to repay the earlier loan. So whether interest of this Mr. B is allowed as a deduction in 24 clause B, what do you think? Here that particular point will come into the picture which we have never used anywhere. Mathematics. If A is equal to B is equal to C, A is equal to C. If Mr. A ki loan is taken to purchase a house property, Mr. B ki loan is taken to repay to Mr. A, indirectly Mr. B ki loan is taken to purchase house property. And that's why interest which you will pay to Mr. B is allowed as a deduction. So what you need to remember, if you have taken any fresh loan to repay your original loan, interest of that fresh loan is allowed as a deduction. Okay, very important point. In the first chapter, we have learned a section called 115 BAC. Tell me, what is section 115 BAC? Can I say it is a default tax regime in which the tax rates are getting reduced substantially? But what is the price for that? If you want to opt for 115 BAC, if you want to go for default tax regime, your tax rate will reduce, but you will not get certain deductions, certain exemptions, which you are getting normally in the old regime. Whenever those particular deduction will come, which is there in the list of 115 BAC, that this deduction will not be allowed. Whenever we'll learn that deduction, I will just cross-link that this deduction is not allowed in 115 BAC with two reasons. For solving the sums, many times the reference will be there. So if you know that, okay, this deduction is only allowed in old regime, this deduction is not allowed in 115 BAC, you can solve that question peacefully. Second, this is for your revision also. See, after our entire direct tax is over, I'll teach you 115 BAC fully at that time, wherein the entire list will be told once again together. But this is just cross-reference. The very first deduction, which is not allowed in 115 BAC, and that is interest under section 24 clause B if your property is a SOP. See what 115 BAC says. In case of LOP or deemed LOP, you are showing your income and you are taking the deduction. We are okay with that. We don't have any problem. In case of self-occupied property or NAV is 0, but still you are taking the deduction, this is somewhat extra. So we will withdraw that. And that's why if you follow old regime, you will get deduction in SOP also. If you follow 115 BAC, interest deduction will be allowed only in case of LOP or deemed LOP. It will not be allowed in case of SOP. So what will happen if it is SOP? If it is old regime, NAV will be 0, but there will be something called as 24 clause B ka deduction, either 30,000 or rupees 2 lakh, and there will be something called as loss, either 30,000 or rupees 2 lakh. But if it is 115 BAC, the NAV will be 0, even the interest deduction will also be 0, ultimate income from house property will be 0. So 115 BAC, everything will be 0 so far as SOP is concerned. Are you understanding this? So if in the question it is written that assume that the person has followed default tax regime, and if the property is SOP, you will assume everything as 0. But if it is shifted out of default regime, that is old regime, deduction is available. One last point. You will understand a concept called TDS. While we'll do the chapter called PGBP, I'll explain this concept. Again, I'll explain when we are doing IFOS. And finally, we'll explain fully when we are doing TDS chapter. As of now, you remember what is TDS in a very layman sense. If I'm supposed to pay you let's say 5 lakh rupees of interest. Then government will tell me that I'm not supposed to pay you fully 5 lakh. I will pay you, let's say, only 4 lakh 50,000. 10% TDS I have to deduct. That is 50,000. And that much TDS is directly to be deposited to the government. Why to do so? That I'll tell you later on. But this is the compulsion that if I'm paying you interest of 5 lakh, I'm not supposed to pay you full 5 lakh. I will deduct 10% TDS. That much I will pay to government and balance I will pay to you. Now let's say if I am a person who has taken a loan from abroad, outside India, then every year interest is to be paid outside India. On that interest, I have to deduct TDS. And if I don't deduct TDS as a punishment, I will not get deduction of this interest. It will not be allowed. What I'm saying you once again. If I have taken a loan from abroad, I am going to pay the interest abroad. I have to deduct TDS. What if I don't deduct TDS? I will not get deduction of that entire interest. And this disallowance, can I say my deduction is not allowed? This is written in section 25. It is a one-liner section. That if you pay interest abroad without TDS, your interest deduction is not allowed. What if I pay interest within India and I forgot to deduct TDS? It is okay. Your interest will be allowed as a deduction. The disallowance comes only when you are supposed to pay the interest abroad and you don't deduct TDS. Are you understanding this? See all the points I have written over here together. First, interest is allowed as a deduction on accrual basis. Second, interest deductions start from beginning of the year in which property purchased or construction is completed. Then interest on unpaid interest, no deduction. That is penalty interest, no deduction. Interest on fresh loan to repay the original loan is allowed. Brokerage or commission, no deduction. Last, no deduction in 24 clause B for a SOP if 115 BAC followed. Please remember, LOP, deemed LOP, deduction is allowed. Deduction is not allowed when your property is SOP and you are following 115 BAC. Last, section 25, if interest paid abroad without TDS, no deduction at all. You will not get deduction of that interest. Just refer this points one, then we'll do some examples. Just refer it once. All the points are important. Now let us solve some question answers. Examples for interest. If interest of April 24 to March 25 paid in April 25, rupees 2,30,000 for let out property, what will be deduction of 24 clause B? First of all, interest is of 24-25 means accrued is 24-25, but can I say it is totally paid in the next year? But still, interest deduction is allowed on accrual basis, so we will get the deduction. Tell me how much deduction we'll get? full rupees 2,30,000 because the property is a let out property. And if it is a let out property, we are getting always full deduction. Even though old regime, even though 115 BAC. Acha, interest of 70,000 payable, but it's okay. We get the deduction on accrual basis. For 24-25, taken for the repairs of a self-occupied property, what will be the deduction? Can we say if it is a self-occupied property and the loan is taken for repair, the deduction will be restricted to rupees 30,000. Tell me, if the person is following 115 BAC, default tax regime, then what will happen? Can I say deduction will become zero? Because in that case, for SOP, deduction is not allowed. Acha, what if the same example is of LOP? What will be the deduction? Can I say in case of LOP, there is no such limit. So full 70,000 will be allowed as a deduction. And what if 115 BAC followed? Then also 70,000 will be allowed as a deduction because it don't restrict LOP and deemed LOP. Last, loan taken on 1st May 2000. Property purchased on 30th June 2005. Interest paid for the year 24-25 for SOP rupees 3 lakh. What will be the deduction? Tell me the amount of deduction over here. Let's assume this is an old regime because it is 115 BAC, so it will be 0 because the property is a SOP. Now understand the property is SOP. The loan is taken to purchase the house. Two conditions needs to be fulfilled for a deduction of rupees 2 lakh. Purchase or construction to be completed on or after 1st April 1999. And second, it should be completed within 5 years from end of the year in which loan is taken. The loan is taken on 1st May 2000. End of the financial year is 31st March 2001 plus 5 years 31st March 2006. And before 31st March 2006, property is purchased. So the limit of rupees 2 lakh will be applicable and hence deduction of rupees 2 lakh. Please understand that 5 years ka limit is not applicable from the date of loan. It is applicable from the end of the year in which loan is taken. Okay. Obviously, if it is 115 BAC, the deduction will be 0. If it would have been a let out property, I would have got full 3 lakh rupees as a deduction. Now, based on this, let us understand illustration number 4, illustration number 5. Now, these are that big kind of example which can be asked in the examination, wherein all the things will get merged from GAV till interest on borrowed capital. Everything will be merged in one particular example. This is the full-fledged example. Going to illustration number 4. Remember, any question of income from house property, what is the most important thing you know? GAV. Once gross annual value is determined, balance all the things will remain simple. Anirudh has a property whose municipal value is rupees 1,30,000 per annum. The fair rent is 1,10,000 per annum and standard rent fixed by Rent Control Act is 1,20,000 per annum. The property was let out for a rent of rupees 11,000 per month throughout the previous year. What is the meaning of this throughout the previous year? There is no loss due to vacancy. The tenant was there in your property for the entire year. Unrealized rent was 11,000 and all the conditions prescribed by Rule 4 are satisfied. So, okay, 1 month rent could not be realized and all the conditions are also fulfilled. He paid municipal taxes, which is 10%, obviously of municipal value. Interest on borrowed capital is 40,000. Compute income from house property. They have not said as per which regime. Old regime or 115 BAC. There is no need to say that because the property is a let out property. It is given on a rent. If it is a let out property, can I say there is no difference? Even if it is old regime, even if it is 115 BAC, answer will remain same. And hence they have not told us that which regime to follow. First, we need to calculate gross annual value. Find out and tell me what will be my gross annual value in this case. What will be my GAV? First, I have to find out expected rent. Municipal rent or fair rent, whichever is higher, that amount of standard rent, whichever is lower, that comes to 1,20,000. Then I have to see what is my actual rent. Can I say actual rent is 11,000 per month? So for the full year, it will be 1,32,000. But can I say unrealized rent is to be reduced from actual rent? So we have to reduce 11,000. It will become 1,21,000. So my actual rent is 1,21,000. Whichever is higher will become GAV. That is 1,21,000. My GAV will be 1,21,000. Are you understanding this? Now the question is too simple. He paid municipal taxes 10% of municipal value. Municipal value is 1,30,000, so 10% will comes to 13,000. So I will reduce municipal taxes of 13,000. My net annual value will become 1,08,000. From that, deduction under section 24. Clause A, 30% of NAV, 32,400. 1,08,000 into 30%. Clause B, interest on borrowed capital. Can I say in case of let out property, there is no limit. Whatever is the interest, you can deduct fully. So 40,000 will be deducted fully. Balance will be 35,600. That will be income from house property. As of now, see, the structure is fixed. So presentation is also fixed. But in any of the chapter, don't focus on presentation first. In each and every chapter, I will tell you how to present that answer. But at the end, up to then you have to just focus on the content, on the answer. Presentation will discuss later on. As of now, are you understanding this answer, yes or no? Okay, just solve it once again on your own and just determine final income from house property. Just do it on Kelsey quickly and tell me whether you are getting the answer or not. Done. Okay. Now moving toward the very next illustration, but a better one. Illustration number 5. Ganesh has a property whose municipal value is 2,50,000 per annum. Fair rent is 2 lakh per annum. Standard rent fixed by Rent Control Act is 2,10,000 per annum. The property was let out for a rent of 20,000 per month. So this is a let out property. However, tenant vacated the property on 31st January 2025. What is the meaning thereof? Property is rented for 10 months and it is vacated for balance 2 months. There is a loss of vacancy 2 months. Acha, unrealized rent is 20,000 and all the condition of rule 4 are satisfied. It is a very similar kind of example which I gave you for that solving purpose. Two things are merged. 2 months ka loss due to vacancy is also there. 1 month ka unrealized rent is also there. Up to this information, first of all, just calculate gross annual value and tell me. Up to this information, calculate GAV. Balance will read further. Okay, so first of all, what we need to calculate over here? Expected rent. Can I say what is the expected rent? Municipal value or fair rent, whichever is higher, that amount of standard rent, whichever is lower, that comes to 2,10,000. So my expected rent is 2,10,000. Acha, actual rent. How much month ka actual rent we are supposed to take? Can I say 12 month? But from that 2 month to tenant was not there. For that 2 month to there is a vacancy. And if it is a vacancy, so that is to be excluded because accrued is only 10 month. From that 10 month, can I say 1 month unrealized rent is there? And unrealized rent is always to be reduced. So ultimately, how much month ka AR is there? 9 month. So 20,000 into 9, actual rent is 1,80,000. 10-month property was given on rent, that is 20,000 into 10, 2 lakh rupees. And out of that, unrealized rent of 20,000 is to be reduced. So actual rent comes to 1,80,000. Now, can I say 2 month loss due to vacancy is there and my AR is less than ER? So what I have to think, over here, that if I add those 2 months, then what will be my total rent? Can I say if I add those 2 months, I would have got more 40,000 rupees. If there is no vacancy, I would have got more 40,000 rupees, which leads to 2,20,000. At that time, it was more than expected rent. Today, it is less than expected rent. Then this happened because of vacancy. Government is ready to give me the concession and my GAV will be actual rent. That will be 1,80,000. So my gross annual value will come to 1,80,000. So it is a very similar example which I gave you earlier. First, you have to reduce unrealized rent and then you have to see the concept of loss due to vacancy. Achha, so GAV is 1,80,000. Now the question is very simple. He paid municipal taxes 8% of municipal value. So how much municipal tax will be allowed as a deduction? 2,50,000 into 8%, that is 20,000. So net annual value comes to 1,60,000. First of all, 24 clause A, 30% of NAV, that is 48,000. Then the question says that interest on borrowed capital is 65,000 for the year. So 24 clause B ka deduction comes to rupees 65,000. Finally, income from house property will be 47,000. It can be a 5-marker question over here. Are you understanding this? So it was a beautiful question in which unrealized rent is also there, loss due to vacancy is also there, and apart from that, municipal tax interest, all those common points are still there. Now, coming to the very last point of this 24 clause B, I have asked you one question earlier. If I have taken a loan from 1st June 2021 to purchase a house, and I purchased the house ultimately on 1st August 2023, from which date I will get deduction of interest? From which date I will get deduction of interest? And can I say, I have said the deduction of interest is allowed from beginning of the year in which purchase or construction is completed, from beginning of the year. And what is the beginning of the year over here? 1st April 2023. So I will get deduction from 1st April 2023. Means whatever is the interest of 23-24, I will get deduction in the year 23-24. Whatever is the interest of 24-25, I will get deduction in the year 24-25, and so on. Tell me, what is the period of which interest is paid, but deduction is not taken? Tell me the period of which you have paid the interest, but you have not taken the deduction. Can I say it is 1st June 2021 till 31st March 2023? 1st June 21 to 31st March 2023. See, because the deduction started from 1st April 23. So can I say deduction is not taken up to 31st March 23? This particular period is called as pre-acquisition period, or if it is a case of construction, it will be called as pre-construction period. Pre-acquisition period or pre-construction period, both the words can be used simultaneously. So this is, let's say, pre-acquisition period. Tell me, it covers how many month? How many month it covers? Can I say 10 month of 21-22 and 12 month of 22-23? So basically it covers total 22 month. 22 month. Let's say my loan is rupees 10 lakh, 20 lakh at the rate of 8%, and let us assume no principal is repaid. What will be the total interest of this 22 month that I have paid but I have not claimed any deduction? How much will be the total interest of this 22 month if the loan is of 20 lakh at the rate of 8%? So can I say the simple formula which can use 20 lakh into 8%, it is per annum. So into 22 divided by 12. Obviously. So what will be my interest over here? It will be 20 lakh into 8% into 22 divided by 12, which comes to 2,93,333. This interest is called as pre-acquisition interest. And if it is a case of construction, it is called as pre-construction interest. What to do with this? It is like a preliminary expense. In business, what we do, current year ka expense we deduct in current year. But if it is any expense which we have done prior to starting the business, we call it preliminary expense. And we don't generally write off in 1 year. We take a deduction over 5 years. We debit to the P&L over a tenure of 5 years. Here it will happen in the same manner. This is kind of a preliminary expense. The name is pre-acquisition or pre-construction interest. This is allowed as a deduction over a tenure of 5 years. 5 years from what? 5 years from the year in which acquisition or construction is completed. In my example, my deduction will start from which financial year? 23-24, because my normal construction or acquisition is completed from which year? 23-24. So what will happen in 23-24? There will be something called as current year ka interest. That year ka interest, 20 lakh into 8% comes to 1,60,000. I will get this interest as a deduction for sure. Plus I will get 1/5 of pre-construction interest because it is to be amortized over a tenure of 5 years. So 2,93,333 divided by 5 per year, how much deduction I will get additionally? 58,667. Total, how much deduction I will get over here? 2,18,667. Now the same thing will happen in 24-25, where in current year interest, that year ka interest will be there, plus 1/5 of pre-construction interest. Same will happen in 25-26, same will happen in 26-27, same will happen in 27-28. Bus. From 28-29, I will only get current year ka deduction because pre-construction interest is to be amortized compulsory over a tenure of 5 years. From 6th year, I will get only that current year ka interest. So how much deduction I will get in the year 23-24? 2,18,667. Now what if this property is a let out property? Okay, full deduction. What if this is a self-occupied property? How much deduction will be allowed if it is a self-occupied property? My question in some other manner, the limit of rupees 2 lakh is for this total interest or only current year interest? And it will be on total interest. In total interest, the limit of 2 lakh will be applied. So in spite of 2,18,667, I will get deduction of rupees 2 lakh. Are you understanding what I'm trying to say? See, let me give you one more example, and in that example, you tell me what will happen. I have taken a loan on 1st June 2023, and the house is purchased on 1st August 2023. Tell me, what is my pre-construction period? Is there any concept called pre-construction applicable over here? The answer is no. Why no? Reason. If the loan is taken is the same financial year in which it is purchased, then can I say deduction will start from beginning of the year in which purchase or construction is completed? So from 1st April 23, I will get itself a normal deduction, and there is no interest prior to this. So there is no pre-construction interest over here because both the financial year is same. Now, let's say loan is taken on 1st August 2020 to construct a house, and that construction is completed on 1st June 2022. Loan is of 50 lakh at the rate of 10% interest. Tell me one thing, from which date my normal deduction will start? From which date I will get my interest ka deduction? Can I say beginning of the year in which purchase or construction is completed? That will be 1st April 2022. So from 22-23, I will get normal deduction. Then what is the period of which interest is paid but deduction is not taken? Can I say 1st August 2020 till 31st March 2022? This period is called as what? Pre-construction period. How much total month are covered in this? Can I say 2021, it is 8 month, 21-22, it is 12 month, total 20 month. Tell me then what will be the total interest of this 20 month? 50 lakh into 10% into 20 divided by 12. Can I say it will be 8 lakh 33,333? And how this will be allowed as a deduction over a tenure of 5 years. So per year, how much will be allowed as a deduction? 1,66,667. So tell me, for the year 22-23, that is the year in which purchase or construction is completed, current year interest will be 5 lakh rupees, 50 lakh into 10%. Plus, can I say 1/5 of pre-construction, 166,667. Total, how much will be allowed? 666,667. If it is LOP, full deduction. If it is SOP, deduction up to rupees 2 lakh. Now, same will go for 23-24, same for 24-25, same for 25-26, same for 26-27. That's it. From 27-28, only 5 lakh rupees will be allowed. That is current year interest. Why so? Just a second, guys. There is some technical glitch over here. Sorry, just a second. Give me 1 minute. फायर भी रिजॉइंट કર્યા પણ એ થઈ નથી રહ્યું વર્કિંગ ગુડ અને એક મિનિટ દીપકભાઈ भी सरनेम पर ले लो स्ट्रीमिंग चल रहा है और आईपैड हैंग हो गया है ये स्क्रीन पे चल रहा है पर वो ऑन स्क्रीन हैंग हो चुका है नहीं होना ये नंबर 1374 1374 2 52 887 yes अभी तो हो गया डन थैंक यू Okay guys, so sorry for this technical glitch. Now it is working. Let us start once again. So yes, what I was discussing about is 5 years I will get this deduction which will be bifurcated into 5 years. And from the 6th year, I will get the simple deduction of the current year. Current year over here means that 28, 29. I will get the normal current year ka deduction. Then onwards, I will not get that 1/5 of the pre-construction ka deduction. That is simple. So pre-construction interest, the simple funda is if the loan is taken in some financial year, property purchased or constructed in some another financial year, then in that case, the deduction will start from the year in which purchase or construction is completed. But you need to understand that whatever is the deduction prior to that, whatever is the interest prior to that, that is allowed as 5 equal annual installment from the year in which property purchase. And current year plus 1/5 of pre-construction total cannot exceed rupees 2 lakh. See, if the loan is taken on 1st April 2012, construction completed on 1st April 2017, so the interest deduction will start from 1718. That is the year of construction completion. However, SSE must have paid some interest from 1st April 12 to 31st March 17, that is called as pre-acquisition interest. And that is deductible in 5 equal installment starting from the year in which construction and acquisition is completed. So for the first 5 years, what will happen? First 5 years, you will get current year ka interest plus 1/5 of pre-construction interest, and that will be total within the limit if it is SOP. There is no limit for LOP or deemed LOP. Acha, pre-construction period will always start from the date of loan, but it will end on 31st March prior to the year in which construction is completed. Because from the year in which construction is completed, you will get your normal deduction. Now, this all point you need to remember only if you don't understand the logic. If you understand the logic, entire thing will go like that only, go in the flow. See what I have written over here. Let's say date of loan 1st November 18. Amount of loan is rupees 15 lakh. Rate of interest 10% per annum. Date of completion of construction is 14th November 2020. Now, can I say that my construction is done in 2021? Loan is taken in 1819. Both this financial year are separate. And hence there will be a concept called pre-construction interest. So my deduction will start from which date? My deduction will start from 1st April 2020. So what is the period of which interest is paid but deduction is not taken? Can I say 1st November 18 till 31st March 2020? Can I say this is total how many month? So this is basically 18-19 ka 5 month plus 19-20 ka 12 month. Total comes to 17 month. So what will be the interest of this 17 month? 15 lakh into 10% into 17 divided by 12. So what will be the total interest? The total interest will come to 2,12,500. And this will be allowed as a deduction in how many years? 5 years. So per year I will get 42,500 ka deduction. Randomly I have asked over here to calculate interest of 6 years. 6 years from what? The year of completion, that is 2021. So can I say in the year 2021, first there will be current year ka interest. Interest of that year. 15 lakh into 10%, that will be 1,50,000. Plus this 42,500 will be added. Total I will get 192,500. Same will happen for first 5 years. From the 6th year, I will get only current year ka interest, that is 1,50,000. Then I will not get pre-construction interest. Are you understanding this? To better understand this, I have made extra question number 2 so that you understand this concept thoroughly. Extra question number 2. You are required to calculate interest on pre-construction period for the following 3 assessee. So there are 3 different cases. In the first case, we will calculate interest for 6 years and we will see both. What if it is SOP? What if it is LOP? So for 6 years, we'll calculate deduction of interest. If it is SOP, then how much? If it is LOP, then how much? First of all, loan is taken on 1st June 2018. Construction started on 1st November 18. Can I say I am least concerned from the date of starting the construction? I'm least concerned. I'm concerned with the date of loan. I'm concerned with the completion of construction. Here the construction is completed on 10th August 2024. The amount of loan is 12 lakh. The rate of interest is 12%. Tell me, from which date I will have the normal deduction? My normal deduction will start from which date? And yes, it will start from 1st April 2024. Then what is the period of which interest is paid but deduction is not taken? Can I say 1st June 2018 till 31st March 2024? How many month? Can I say 18, 19, 10 month? Then 19, 20, 20, 21, 21, 22, 22, 23, 23, 24. Total 5 years. 60 month plus earlier 10 month. Total 70 month. What will be the total interest of this 70 month? 12 lakh into 12% into 70 divided by 12. That will be 8,40,000. And this 8,40,000 I will take as a deduction in 5 equal annual installment. Means per year how much deduction I will be allowed for this? 1,68,000. Tell me, what will happen in the year 24-25? First, I will get that year ka interest, that is current year ka interest, 12 lakh into 12%, that will be 1,44,000. Plus, how much will be added? 1,68,000, that is 1/5 of pre-construction. So, can I say totaling to this, I will get deduction of 3,12,000. Tell me, what if this is let out property? How much deduction I will get if this is a let out property? Full 3,12,000 without any limit. What if this is a self-occupied property? Tell me, what if it is SOP? How much deduction I will get? Is it rupees 2 lakh? 30,000. I will get a deduction of 30,000. Why? Why I will get a deduction of 30,000? Because construction is not completed within 5 years from the end of the year in which loan is taken. You see, it is a hidden adjustment which module has not incorporated anywhere. So I have tried to cover this example over here. You see, loan is taken in which year? 1819. So end of the financial year comes to 31st March 2019. Plus, I have to complete construction within 5 years, which is 31st March 2024. But my construction is completed on which date? 10th August 2024. That is after 5 years. And hence, in case of self-occupied property, how much deduction I will get? 30,000 rupees and not 2 lakh rupees. See, this is just for your understanding. For first 3,12,000, if it is LOP, 3,12,000, if it is LOP, only 30,000. And this will continue for 5 years. From sixth year, I will not get pre-construction interest. I will get only current year ka interest 1,44,000. If it is LOP, full deduction. If it is SOP, 30,000. Okay, solve this second one. I have taken a loan on 11th April 2024. Construction is completed on 20th January 2025. 5 lakh rupees ki loan, 15% rate of interest. Tell me, what will be the total pre-construction period? You just need to tell me now pre-construction period ke month. That for how many month pre-construction period is there? Tell me. For how many month pre-construction period ka table is there? There is no pre-construction period because the financial year in which loan is taken is the same financial year in which construction or purchase is completed. And hence there is no pre-construction period over here. Whatever is the interest, it will be fully allowed from the first year itself. Are you understanding this? Last, 15th October 2020, I have taken a loan. Construction is completed on 28th July 2024. Tell me, my normal deduction will start from which date? Can I say both the financial year is separate? So pre-construction period is there. Normal deduction will start from which date? 1st April 2024. So how much month ke periods? How much month ke interest I have paid, but deduction is not taken? Can I say 15th October 2020 till 31st March 2024? So total into 31.5, 41.5 month. That is the total pre-construction period. And of that interest will be calculated and it will be divided into 5 years. That is how this pre-construction period ka interest is to be calculated. Now let me tell you one simple thing by listening of which you will feel happy. ICAI generally don't tell you to calculate pre-construction interest. It will directly give you total pre-construction interest amount. You are just supposed to bifurcate into 5 years. That's it. You are just supposed to bifurcate the given interest into 5 years. And you need to amortize. That's it. Then sir, why you wasted this much time? I have not wasted. Huh? This entire recipe is given in ICI module. So what if they can ask you? They can ask you by giving the dates that find out pre-construction interest. Then what you will do? So we have understood the worst, so that we can manage even the worst case. Now let us based on this understand illustration number 6. Mona has one house property at Indira Nagar in Bangalore. She stays with her family in the house. Now what does this line means? The property is a self-occupied property. The property is a SOP. The rent of similar property in the neighborhood is 25,000 per month. What they are trying to give us? Fair rent. The rent of the similar property in the neighborhood means fair rent. The municipal value is 2,80,000 per annum. Municipal tax paid is rupees 8,000. By information given up to now, calculate net annual value. Calculate net annual value. Hey, can I say the property is a self-occupied property? the net annual value will become 0. Whatever information we have read up to now is to be ignored because NAV is 0. Further, the house construction began in April 2018 with a loan of rupees 20 lakh taken from SBI Housing Finance Limited at 9% per annum on 1st April 2018. The construction was completed on 30th November 2020. Can I say construction is completed within 5 years? However, if you understand, the loan is taken in some another financial year, the construction is completed in some another financial year. Two financial years are separate. So there will be a concept called pre-construction interest. The accumulated interest up to 31st March 2020 is rupees 3,60,000. See what they have directly given. Pre-construction interest. They have directly calculated and given us with that 3,60,000. And what we are supposed to do? Amortize over 5 years. So if 3,60,000 is the total pre-construction interest, how much deduction will be available per year? Can I say it will be available 72,000. This is pre-construction interest which will be allowed every year from 2021. So basically 2021, 21, 22, 22, 23, 23, 24, 24, 25. Ours is the 5th year. So we will get the deduction of 72,000 plus. This is the pre-construction interest. Can I say we'll get current year ka interest also? Now they have written further. On 31st March 2025, Purna paid 2,40,000 which include 1,80,000 as interest. So the balance will be principal repayment of which we are supposed to do nothing. We are supposed to do something with interest. And how much is the current year interest? 1,80,000. So current year interest is 1,80,000. Pre-construction interest is 72,000. Total deduction I want to claim 2,52,000. But can I say this is a SOP? Loan is taken to purchase the property, to construct the property. Construction is completed within 5 years. And obviously it is completed on or after 1st April 1999. So deduction will be restricted to rupees 2 lakh. And hence 24 clause B deduction will be rupees 2 lakh. Ultimately, there will be a loss of house property rupees 2 lakh. See, 0, but total 252, which will be restricted to rupees 2 lakh. Loss from house property rupees 2 lakh. But why I have done all this, you know? Because assessee has opted out of default tax regime, that is old regime. What if they would have said assessee has followed default tax regime? Can I say then NAV is also the 0, 24 clause B is also 0. Because if you follow 115 BSE, in case of SOP, deduction is not allowed. And hence my income from house property will also become 0 if it is 115 BSE. Are you understanding up to now? See, whatever we have done up to now in income from house property was all about general cases. If your entire property is SOP, then what? If your entire property is LOP, then what? And yes, whatever we are supposed to learn, we have already done it. But now the very crucial part of this chapter starts, and that is special cases. What is special cases? Permutation combination. That what if half property is SOP, half property is LOP? Part of the year SOP, part of the year LOP. I have 3 SOP. How to select any one of them as deemed LOP? Then if I have a co-owner, how to bifurcate the income between co-owner? This all things will learn in special cases. These are not the cases given in the act. For simplicity purpose, I have created these cases within my notes so that you can understand each and everything perfectly. We are supposed to do nothing different. We are just supposed to implement the same thing which we have learned up to now. I'm starting special cases, but before that, first of all, let us recall whatever we have done up to this particular point. I'm beginning with that structure. What is the structure of calculation? Gross annual value minus municipal tax paid by owner during the previous year, net annual value minus deduction under section 24 clause A 30% of NAV, clause B interest on borrowed capital. I will get income from house property. How to calculate gross annual value? Municipal rent or fair rent, whichever is higher, that amount or standard rent, whichever is lower, that is called as expected rent or actual rent, whichever is higher. Acha, but if it is unrealized rent is given, it is to be reduced from actual rent. If loss due to vacancy is there, but my AR is more than ER, AR will become GAV. If my AR is less than ER, I have to see what if there would have been no vacancy. If that time my rent was more than ER, now it is less than ER, it is because of vacancy, I will get the benefit. GAV will be actual rent. But if after adding the vacancy loss also, it is less than ER, today also it is less than ER, no benefit will be given. Whichever is higher, expected rent will become your GAV. If it is a self-occupied property, GAV will be 0. If it is a deemed let out property, expected rent will become your GAV. From this GAV, what will deduct? Municipal tax paid by owner during the previous year. If it is given as a percentage, it is of municipal value. If it is not paid, no deduction. If paid by tenant, no deduction. If paid outside India, full deduction. SOP, no deduction. Deemed LOP, deduction available. 24 clause A, 30% of NAV, it will be 0 if your NAV is 0. In two cases, your NAV is 0. First, if it is a self-occupied property. Second, if you are a builder, building is stock in up to 2 years from end of the year in which certificate of completion is received. Then 24 clause B, interest on borrowed capital. For LOP or deemed LOP, either repair renovation or purchase construction, you will get full deduction without any limit. If it is a SOP, repair renovation 30,000, purchase or construction, two conditions fulfilled, 2 lakh, otherwise 30,000. First condition, purchase or construction should be completed on or after 1st April 1999. Second condition, purchase or construction to be completed within 5 years from end of year in which loan is taken. If the loan is taken in some another financial year, construction has been completed in some another financial year, deduction will start from that second year. Then whatever is the interest paid before that is called as pre-construction interest, and that is allowed as a deduction over a tenure of 5 years. Interest deduction is allowed on accrual basis. If it is SOP, deduction of rupees 2 lakh is per owner, not per house property. Interest on unpaid interest on interest, that is penal interest, is not allowed as a deduction. If you are taking any fresh loan to repay your original loan, you will get full deduction. Commission or brokerage, no deduction is allowed. Then what we saw, if you pay interest abroad without TDS, you will get no deduction at all. And then we saw, if you follow 115 BAC, in case of SOP, you will not get any kind of deduction. Up to which, how much section numbers we have understood? Section 22, basis of charge. Section 23, determination of gross annual value. Section 24, that is all about deduction. 24 clause A, 30%. 24 clause B, interest on borrowed capital. One-liner section, section 25. If you pay interest abroad without TDS, you will not get any deduction. I'm just starting with the very first special case, and then we'll end the lecture. Because the first special case is a very smaller one, it is a theoretical case. Let's take one example. There is a person, Mr. A. Let's say he's staying in Delhi. He has a house property in Delhi, which is SOP. His employer called him and he said, from tomorrow you have to shift yourself to Mumbai. Transfer. But Mr. A said, I don't have any property in Mumbai. So employer said, no issue. You stay in a rented house. We will reimburse the rent or you bear it. No issue. But you have to stay in a rented house because Mr. A don't have any property in Mumbai. And he had to transfer himself in such a quick manner that he find zero time to find a tenant. What he did, he simply vacated this premise and he went to Mumbai and he will stay in a rented house in Mumbai. So what is the issue? Can I say the house property which is in Delhi, now it is vacated for the entire year. That property will be called as what? Deemed let out property. And GAV will be what? Expected rent. Means on a notional rent now Mr. A has to pay the tax. But understand his situation. He has to have a transfer to some another city. He will stay in a house which is not owned by him. He is not generating any rental income because he had to transfer in a very hurry manner. So basically, can I say he's totally going into losses? But income tax will assume that this property is a rented one, deemed let out property, and it will charge notional tax on that. Now, what Mr. A will say, if a builder was having this problem, income tax, you gave them concession that NAV will be zero for 2 years. What if now a salaried is having this kind of problem? Government said, Tathastu, will give you the concession over here also. Three condition. If you are doing a transfer from one city to another city because of your job, business, profession, the city from which you are doing the transfer, your house property is totally vacated. The city in which your transfer is being done, you don't have any other house property of your own, then the property which is fully vacated will continue to call it SOP. Will not call it deemed LOP, will call it SOP. So that NAV will be zero by default forever. It is not only up to 2 years, it will be forever. We will call it SOP. Case is over. See what I have written over here. When the property not occupied during the whole previous year due to employment, business or profession at some other place, then the property will be considered SOP if that concerned property is actually not let out and he has to reside at some other place in the property which is not owned by him. Can I say all these conditions fulfilled in case of Mr. A? He had to transfer because of job. The place in which he is going, he don't have his own property because he is staying in a rented house. The place from which he is going, the house property is fully vacated. So three conditions fulfilled. We'll call this property self-occupied property and not deemed let out property. So the concession is given indirectly. Based on this, let us understand illustration number 3. So please understand, so many examples we have done today. What is your ethical duty? Whatever example we have done today, you will redo it today itself on your own. So that if any confusion is there, you can tell me tomorrow. Illustration number 3. Mr. Manas owns 2 house property, one at Bombay, wherein his family resides, and the other is in Delhi, which is unoccupied. Now, why it is unoccupied? Because he lives in Chandigarh for his employment purpose in a rented house. Can I say because of job he had to transfer from Delhi to Chandigarh? In Chandigarh, he is staying in a rented house and the house of Delhi is unoccupied. So that Delhi ka house will also be called as what? SOP. So he has now 2 property. One in which family reside. That one in which family reside, Bombay wali property is also SOP. And the second one, Delhi wali property is also SOP. Both the properties are called as SOP. Can a person have two SOP? Yes, obviously yes. So can I say this property ka NAV will be 0? Even this property ka NAV will also be 0. But if you read the last line, he is opting out of default tax regime. That means he can claim 24 clause B ka deduction. Now let us read the question further. For acquisition of the house property at Bombay, he has taken a loan of 30 lakh at the rate of 10% on 1st April 23. Last year, he has taken a loan 30 lakh at the rate of 10%. So what will be the interest for the year 24-25? Can I say 30 lakh into 10%? 3 lakh. But this is to SOP and the loan is taken for purchase. If all the conditions are fulfilled, how much is the maximum deduction this person will get? 2 lakh rupees. So here the deduction will be rupees 2 lakh. Further, he has not repaid any amount so far. That's why I have done 30 lakh into 10%. In respect of house property at Delhi, he has taken a loan of 5 lakh at the rate of 11% on 1st October 23, again last year, towards repairs. So tell me, what will be the interest for current year 24-25? Can I say full 5 lakh into full 11%, total 55,000? But this is a SOP. Loan is taken for repairs. What is the maximum deduction you will get? 30,000. So here you will get 2 lakh rupees ka deduction. Here you will get 30,000 ka deduction. Can I say total losses will be 2 lakh? Because in case of SOP, the limit of rupees 2 lakh is per owner, not per house. So both the house combinedly, the deduction will be rupees 2 lakh. Are you understanding this? This point I have discussed earlier also. So that was our first special case. Whatever we have done, I already revised prior to special case, and that was a small one special case. What is your duty today? Whatever we have done up to now, we have done so many things. You will revise it today. You will do all the questions once again, and then you will come to tomorrow's lecture. Tomorrow's lecture will be on BB Virtual Preparation app that is not on YouTube Live. Thank you so much.